Reconciling Amazon ledgers is never fun. There's nuances you need to understand. Amazon, they say the ledger report's like a bank statement, but I disagree. Amazon's not giving the details necessary in a single report to act like a bank statement, and you need to actually combine the detail view and the summary view to make sense of it all, and those reports do not match. So in this video, I'm going to go through how to make sense of differences between the two reports and discuss the nuances of the reconciliation process. So we need to start with what is our starting inventory. And if we look at this help page, scroll to the bottom, we'll see the beginning inventory is actually the starting warehouse balance plus the in transit from the previous month. So let's simplify this and just say, well, it's actually the ending balance on the previous month plus the in transit on the previous month. So we could just look at the previous month to get the starting inventory, let's say for January 2024. So let's build that first report out of three that we need, which is the December 31st. We could just look at a summary view by country for, let's say, not last month, but a specific month of December. We actually have to pick a daily for December 31st. So I'm not going to actually download these because I've already downloaded them and imported into my spreadsheet, but I want to go through what you need. That's one out of three reports you need. You also need the summary report. That would just be summary country for January. So let's do that. It would be the monthly report for specific date of January to January. And that will just download the whole summary report for the month. Then you need the ledger report. So let's look at the detail view. And this one can be just for the range of the 1st to the 31st. And there you have it. Those are the three reports you need. You'll put that into Google Sheet. And here's the December 31st end. I just imported that as is. I summed the column of the in-transit balance, the ending warehouse balance, and then the total between the two. Then you have the ledgers, which I blacked out a couple columns for privacy. And I've added this green field, which is a unique field. And this basically combines the FNSKU, the disposition, and the country. And that is important because each of those have their own ledger. You can't cross those, otherwise you're going to get confused. So then I sum the details, which I'll go through more later. And then I do a monthly summary. The columns from the report directly are in white. The green ones are ones that are calculated. Again, we have the same unique field as I described. And then the green fields here for each of these columns, this basically just sums the data from the ledgers and matches it up for the category. And then the orange fields are the calculated fields that are just subtotals. So just a note while I'm here, this found, lost, damaged, disposed, other are adjustments that are important to note if you want details. You can look at the help page here, this first link, and it says Amazon types and reason codes. And this tells you all the reason codes you may see, which will coordinate with the ledger if you just search by the adjustments. Each of these has a reason here that corresponds to that legend. All right, so let's bring back all the types and move on. So that total FLDDO, I call it, should coordinate with the adjustments from the ledger report. So if we try to reconcile on the total inventory, it's pretty basic and it works. You have the data coming from the starting inventory, which is just copied over to the ledgers as a starting point. And then you have the ending inventory coming from the monthly report. That's already known. So you back in the number of 2874 is this must be the change between one month to the other. And that coordinates with the ledgers. But it's not very obvious. That 2874, if you just sum all the numbers from the quantity of the ledgers, you're going to get 2389. The reason is this includes warehouse transfers. And warehouse transfers do not change the overall balance of your inventory. It only changes the available or the warehouse inventory. So if we take that out, then we get the 2874 number, which you can see the formula is not including warehouse transfers. So that matches up, but I have this note, Amazon could be losing your inventory in transit. So it's not good enough to just reconcile the total inventory. You want to reconcile your in transit inventory as well. So in transit inventory, we have this 550 that comes from the 31st end here. And we have the end inventory that comes from the monthly summary 51, which would just be the in transit between warehouses directly from the report, 51 here. And then we have this is copied from here, and we have this 485, which is the ledger change. And that comes from the ledgers here, but it's only the ones that are warehouse transfers. So if we just look at that, you'll see the formula is just where there's warehouse transfers, that's 485. So we actually negate that. We add a negative in front of that because it's actually a positive warehouse transfer means you're transferring from the in-transit balance to the ending warehouse balance. So we need to negate that. And the result is 65, which doesn't match with the 51. It actually says there's a difference of 14. Now, the explanation of that is kind of nuanced. And I looked at that by looking at the monthly summary report. The monthly summary report, we have to go to these unknown events. Unknown events does affect the ending warehouse balance, and these total to 17. And that is noted here, 17. And I call this warehouse transfers being received without a ledger event, meaning the warehouse transfer is recognized in the form of an unknown event on the summary monthly report, but there's no record of it in the ledger. So there's no explanation. So I'm just assuming they're warehouse transfers because that makes sense with the numbers. It could be something else, and maybe further data would suggest otherwise. But so far what I've seen in the data is these unknown events just represent this. Warehouse transfers being received without a ledger event. Numbers still don't match. And the only other way to acknowledge the discrepancy that I found is if we take a look at this lineup of what are the warehouse transfers from the ledger versus what it is from the summary report. There are these ones marked in red, which are differences. And what effectively is happening here is this is being reflected in the month-end summary report as a -1 warehouse transfer, which is bringing inventory in from the in-transit balance to your ending warehouse balance, but it's not reflected in the ledger. This one doesn't equate. So the total of all these is 485 from the ledgers, as we saw, and only 482 from the summary report at the end of the month. And that is the other discrepancy of 3. And here you have it. The total is 14. And this explains the difference with the reports. So do what you want with that, whether it's opening up a case with Amazon, try to ask for explanation. But this is how you reconcile between the monthly report and the ledgers. A couple other notes. The valuation of inventory, which is also something that you may want to consider for accounting purposes, you can't really do much with the data that Amazon gives you because you're basically going to look at the ending inventory, which is, let's say, this here, 3917, and you're going to, I guess, multiply each of these individual FMCs by their unit costs. But what if your unit costs change? Well, you have to just make an assumption. So that is hard to track unless you are using like a FIFO layer or LIFO layer calculation. But in order to do that, you would have to track the whole history of events from the moment the inventory comes into Amazon in the form of receipts from your inbounds to every other event that then uses the FIFO layer. So this is, quite the complicated process overall to reconcile your monthly report. And in part 2 of this video, I'm going to show you how you can automate this reconciliation as well as solve the issue of changing unit costs and getting your true inventory valuation.